Greetings, Dr. Jeffrey Scott here. This is my Market MRI Pro update for February 12th, 2026. I titled this one, Can the CPI Prevent a Major Meltdown? Today was an interesting day. I have a fairly significant position in HWM. And so as I watched my balance as I was sitting on planes most of the day, doing a little bit of trading, I didn't realize how bad it was until the end. And obviously, the market sold off into the last 30 minutes to aggravate the losses. Um, Bad day in the market. Um, is this it? And yesterday's note that I put in Top Down Trader, and then I did follow up with a video once I got it to get processed, was the concern about what happens if the NYSE decides to break down and follow the Nasdaq down. And did that happen today? Again, my name is Jeffrey Scott, marketmripro@gmail.com. Google Groups called Top Down Trader, and www.marketmripro.com. This session is for educational purposes only. Anything I talk about should be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate the tools of top-down analysis and how I apply them. Trading involves risk. You alone are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisor before making trades. And I've got tools on multiple platforms. I'm going to do a second video which will be placed in Top Down Trader. Some of the folks who bought Metastock want to see how I would use, or how I do use, Metastock to do some of my reviews. And as I made it clear, I think, on some of my prior videos, there are things I can do in Metastock I can't do in Market MRI Pro, and there are things in Market MRI Pro I can't do in Metastock, and I use them both, and you'll see why. Join my Google group. It's called Top Down Trader. How do I join? You go sign into Google Groups, click All Groups, find the group you want to join. Join that group. Let me know how to contact you. It's the only mailing list I keep. Hey, I appreciate everybody that signed up on the programs that I'm doing coming up. Everybody invites me now to speak at their programs, and I'm supposed to invite my mailing list. I don't keep one, so really appreciate the folks that have clicked on those. You'll see them in the remarks section below tonight as well. Know your news and earnings. So jobless claims were today. Home sales. Stephen Murin spoke. We know what he wants, more cuts. But what do we got tomorrow? We got the CPI complex. If this thing comes in really hot, it's going to be bad. If it comes in light, which I highly doubt will happen, it might be perceived as good. And if it comes in just right, I'm not even sure it's going to be enough to change things, because that's not going to signal a need for anything to happen. Let's talk about some of the earnings from a rate cut perspective. Let's talk about some of the earnings that came out tonight. I'm just going to call out some of the big movers. CRSR, I think that's Corsair. That might be a computer component, up 23.8%. Arista Network, 16.7 up. Rivian, they must be selling something because they were up 15.6%. Instacart was up. CART, maybe it's not Instacart, maybe it's something else. Sorry about that if I messed that one up. Up 15.1%. Applied Materials, tech name, up 14%. Brothers Coffee, up 14%. SPSC was up 13%. Now, I want you to think everything was up. Kohu, down 20%. Pinterest, down 18%. AENT, down 17.2%. NUS, down 16.2%. DraftKings, down 15.1%. CALY, down 12.7%. So it was a mixed day on earnings, but there were a lot of big movers. Right now, futures are up a bit. I'll just leave it at that. I'm doing this at 9:30 in the evening. It is bad judgment to hold stocks over earnings dates. It's bad. It's Let me say that again. It is a judgment call to hold stocks over earnings dates. It is bad judgment to not know when your stock's earnings date is scheduled. For any questions about what I do, information about the program, just email me at marketmripro@gmail.com. If you have interest in Market MRI Pro, I invite you to go to the Windows App Store, search for Market MRI Pro. They'll charge you probably $7.95 to download it, and that'll give you 72 hours of free use. But if you email me within or after that 72-hour period with your email address, I'll have my partner Praveen extend you for 30 days. That way, for $7.95, you'll get 30 days access, and then we'll see what the prevailing pricing is at the time. For Market MRI Pro customer support, coding at Market MRI Pro. Now, what I mean by pricing, I raised the price to $26.95. I am going to be doing a talk on Valentine's Day, and I'm going to be doing a talk on the 20th. So I will announce on Saturday, which means I'd honor it today, that I'm going to lower it, sale price, to $19.95. And if you are a top-down trader group, you'll get an extra $100 off. And if you own my product, the add-on for wealth charts or Metastock or TradeStation, I'll give you up to $200 for each of those. So there's a way to get it significantly lower, and I like to reward those people that are repeat customers. And join my top-down trader Google group. So let's look at the market today. Volatility was up 6%. Dollar was down a bit, just mostly flat. But all the industries were down more, indexes were down more than 1%. Diamonds 1.33, Spiders 1.54, Q's 2.03, and Russell 2.04. And Bitcoin continues to dive down 3.24. So over 5 days, Bitcoin has made up some of its recent losses, still up 2.63. Russell's the leading index over the last 5 days, up 1.45%. If you look at the NYSE new highs minus new lows at 12 months or 52 weeks, holding up well at 191. Came down some, but still pretty strong. But you look at the NASDAQ, and it's approaching minus 100. It's pretty weak. If you look at participation today in the S&P 1500, only 27% of the stocks were up. In the NASDAQ, only 25% of the stocks were up, and the NYSE only 26%. That is what I call a weak market day. And if you look at S&P 500 sectors, and you look at what are the leaders, utilities up 1% and staples up 0.81. And what are the laggards? Well, you can look down here and see technologies down 2.88, financials 2.29, energy 1.75. Oh, that's from the open. My bad. Let's redo that. 1.48 for utilities, 0.92 for staples, 0.16 for real estate, and healthcare was down just 0.16. What are all these? These are very defensive. What's the laggards? Technology 265, 199 on financials, energy 1.82, and communications 1.8. Those are what you want to be leaders, not the laggards. And if you look at themes, there's only 4 themes out of about 60 that are up. Data centers 1.84, cloud 0.95, aerospace and defense 0.68, and then robotics 0.1. What were the main laggards? Silver 8%, gold 7.26%, mining's 5.7, fintech 5.5. Those were the big ones. What's interesting is, as bad as silver has been, it's still up 28 or 23, almost 24% in the last 2 months. A really rough day on Wall Street. If we look at the timing model, did anything change? Let's start with the weekly. Actually, let's start with the monthly. The monthly, just looking at the green lines, is still a buy on all 4. Spiders, Qs, Russell, and Diamond. Look at the weekly. The only sell signal remains the Qs, and it's still below the WMA, so nothing to suggest it would change. And if we look at the daily, we're going to see changes. We'll see breakdown of the spiders, breakdown of the Russell. Qs are still bad, and the diamonds are the lone holdout. But boy, if they're down at all on Friday, they're going to flip to a sell. I'm going defensive. I've certainly hinted at it the last couple of days when I've talked about buying puts and raising cash. I start when I get worried about the market. I buy puts on my big winners. Sometimes it turns out to be a good play. Sometimes it's a waste of money. But for example, on HWM, I was sitting on $225 puts. So when it dropped down, I had a put on it. And so I actually kept my long position. Should have closed the put, which I did on a couple of my other positions. And then today, HWM had a major day, and I made money on it. I would have made more if I didn't have the put. But those puts make me sleep at night easier. And I've sold a number of positions to raise cash, as I mentioned. I will enter the market tomorrow if we're up, probably doing more of the same, as I don't trust this market here. Now, of course, we'll get the CPI before the market opens, so I don't have to worry about not knowing it, and that might determine something. If I look at the indexes, I'll give you the bullish and the bearish case. Let's start with the first one, which is the spiders. Here's the bullish case. It has bounced multiple times at the 100, which is this purple one. We are not far from the 100. Our closing price, let me leave it over here, today was 68.3276. The 100 is 68.11. So 31 points and change on the S&P will get us to that 100 where I'd expect to bounce. A break below that's going to be pretty worrisome. So the bullish cases were close to support that's worked multiple times. And the other message here is, don't forget my seasonality. I've been talking about it for a month now. For whatever reason, seasonality, strong history, repeats itself, turns down at this point of the year. Qs. This one's worse. This one's already broken well below the 100, and it just feels like it's coming down to this area here. And that's coincidence is where it pulled back in November as well as the 200. Could we rally and go to new highs? Of course we can. I just don't see that happening. And oh, by the way, for those that follow the O'Neillian follow-through day story, if we close below the low of this bar here, that negates the rally attempt. So we've got, could bounce, certainly could after this big sell-off, but boy, we've got negative seasonality coming in on the Qs. The diamonds, well, this guy still hasn't broken down below the 17 or the 21 EMA, which are right here. It could rally. It does have some negative seasonality. It's the right place. You'd expect it to bounce. But that's the good story. A pullback to the 50 or even the 100 again would not necessarily mean that we've broken our major uptrend. Just hurt some in your account. And then if we look here at the Russell, the Russell's kind of still going sideways. So if I wanted to say I'm not as worried here, you could. But it does seem like a tag of the 50, as it's done several times on this rally, is likely. Look, a little bit further pullback and a bounce on all these indexes, who cares? Long term, it's nothing. But is it more than that? Seasonality says we could go down a little bit. If we look at the VIX, how long have I been talking about why is it not coming down and why is it running up that trend line? And oh, by the way, look how strong seasonality is on volatility here. You only get volatility if the market goes down. Pretty much. I guess you could have volatility on a big move up too, but I kind of think the market goes down. And oh, by the way, we're breaking out here. We closed at the high of the session. Let's see what happens tomorrow. That's worrisome. And the dollar's doing nothing. And I don't want to forget how far it is off its highs. So, ugly. How about commodities? Let's blow it up. Gold. It's not gold. This is gold. Gold is consolidating right above the 21-day EMA. It looks better than silver, and it's pulled back significantly off its recent highs. Here's silver breaking down below the 50. And if you go back to 2011 and you look at what happens to silver after it has these major melt-ups, it takes them a while before they start going higher. The next one was not supposed to hit that one. Shouldn't be drinking water while I'm using the mouse. Let's go back to the commodities. The next one is oil. The oil broke out, and it's kind of holding up okay here. I guess it's waiting to see what happens with the U.S. and Iran. Gas is pretty cheap down here still. I'm talking about for my car. Natural gas is broken down. Not doing much. The 10-year was down sharply. It was down 1.54%, and the 30-year was down 1.64. What causes rates to drop when the market is having a day like it did on Thursday and people are worried about the economy or they're worried about something? They buy bonds. If you buy bonds, the price of the bonds goes up. What do rates do? Rates go down. So I think these are much anything else a flight to safety and buying bonds. And what happens in a recession? People buy a lot of bonds. And ultimately, I guess the falling rates get us out of the recession. Buckets. Are we bad enough? No. 12% down on the NYSE, 11 on the Nasdaq, 15 on the Russell 2000, and 14% on the S&P 1500. What does that mean? It means on these four indexes, we now have got double-digit stocks that have traded now below their Bollinger Bands. When we get to 25 or 30%, I pay attention. We have enough here to say we're getting short-term oversold, and we could bounce. But I do think there's still further that this can pull back. What else can I show you? Market breadth. Here's the Nasdaq, tail of two markets. Let's click on it. Whoops, don't move on me like that. High-low jump is minus 79. It's getting pretty low. It's not minus 95 yet. Stocks above the moving averages continues to drop. New high, new lows, AD line, up-down volume are all negative. It's still under the influence of these Hindenburgs, so they worked. It had a eureka on this attempted rally, which is a very bullish day, and it's already failed, running into the 50. Shocker, no surprise. And the 13-week new high, new low has dropped to 0.29. We could bounce here. Can go a lot lower, though. And you contrast that with the NYSE that had one bad day. Had all-time highs yesterday. In fact, it hit all-time highs early in the day today. Is it all over? It could be, and that's the problem. It may not be. We may still be going higher. So it hasn't broken down yet. But this is really, when's the last time we had a day that looked like that? It was back here. And what happened? We had a big rally the next day. We had it again over here. We had a big rally. So we may rally, maybe make this go away. Still plenty of stocks above the moving averages, but we're not an extreme. You could see new high, new lows still positive. And look how they've been green almost the whole way up on this. While the AD line up-down volume turned negative. You're still under the influence of these confirmed Hindenburg omens. And these three X's are the bango telling me that there's been exuberant buying here. So what's just going to happen? Is the NYSE going to break down, or is the NASDAQ going to come back and cure itself? I think the former, and I think we're going to have a bit of a sell-off coming. But what do I know? We got big information coming tomorrow. Let's see what that says. If the CPI comes in and pleases the bulls, we could get a big rally because they may think we got a rate cut coming. We'll see. If we look at the ratio charts, you'll see where the strength is. It's easy to see. Materials, energy, staples, um, actually, materials, energy, staples, and industrials, and look at the defensive plays of real estate and utilities. And then you look at things like technology weak, financials weak, Bitcoin sucks, communications weak, discretionary weak. Healthcare is kind of neutral here, and that's kind of a defensive play, so sometimes it does okay in this kind of a market. I look at the broader market breadth, and I gave everybody the code for this. You can take a look at these spiders, SP 1500, the NASDAQ, the Russell. I always look at these numbers, 0.7, 0.67, 0.29, which we know in 0.47. None of those are at a level expecting a reversal to the upside or downside. And then you can play around with this, stocks above the moving averages, AD lines, and then RSIs. And RSIs are dropping, but nothing's below 20. So I'm a little bit nervous, folks. You can tell how I've changed over the last couple of days. I let the market lead me to where my conclusions are. Very quickly, let's just look at, let's get back to what I want. Hold on one second. Highlight Bitcoin. Bitcoin's highlighted. Enlarge it. All right, so Bitcoin remains in a brisk sell-off. Imagine if your portfolio does the same thing. Ouch. Technology, it really hasn't broken down hard, but it had a big down day today, down 2.65%. That's pretty ugly. Discretionary, down a lot today, 1.38. Communications, just a new breaking down. Here, 1.80. What a lousy day today. Industrials, even industrials were down a lot today, 1.2%. But it's kind of like the NYSE. They're down off of highs, so they're not broken. And we'll see where the follow through is. Financials, boy, they look ugly. Boy, am I glad I kept my Bank of America puts. I have 57 and a half puts, which expire next week. And it dropped down today like 52. Where did it close at? 51.69. Yeah, those puts were losing money for a while, but not now. Notice a double momentum to the downside signal. Financials don't look good. Energy holding up well. I'll leave it at that. Materials holding up well. One bad day, but does one bad day mean a big change? I don't think so. Here is real estate. We talked about it back here that it's just starting to go up nicely. Utilities, these are very defensive, so no surprise. Doesn't say much for the market. Staples, defensive, looking great. Here's healthcare, kind of neutral. And we're back to Bitcoin. Now, you want to see ugly? Let's take a look at some of the major stocks that I have some of these in my long-term holdings. Long-term holdings, I start to put some contra ETFs on or do something because I don't usually want to pay the taxes, but there's some really ugly things here. Amazon, down hard. Apple broke out of a little box, breaking down, new sell signal. Google broke down after earnings in a sell signal. Meta couldn't hold the earnings gap, breaking down big today, down a lot of dollars. It was down 2.82% on a $630 stock. A lot of money. Netflix increased its breakdown today. This is just depressing. Tesla, failure here, classifies as one of those John Person low close dojis. Bearish candle pattern. Still in a buy signal because I don't know why, but we'll have to see where this thing ends up. But doesn't look good. Nvidia remains in a trading range. And I think we're still going to wait and see what NVIDIA earnings are doing. It's off its highs, it's off its lows, and it remains to be seen what's going to happen. Microsoft, boy, this was a canary in the coal mine, selling off prior to the markets, still selling off. And then Labu, biotech, well, did the bow break and is it about to fall? It might be. Pharma holding up better. In data centers, that's kind of topping tail. Is this the end of data centers? I sure hope not. I loaded up on those of late, and I'll be lightening up on those probably tomorrow. Defense, sometimes things do differently than their um, ETF, and we'll take a look at HWM in a little bit. And then we have back to Amazon. I didn't see one thing there that looked good except data centers, and it looks like it's potentially a shooting star reversal coming. I'll show you some really good things that charts that look good, things that look very viable here. And the bad news is you don't want that to be true because that's bad for your other positions. SPXS goes up when the S&P 500 starts to break down. Squeeze with the momentum breakout in volume. Viable. Dog, I'd like to see it clear the 50, but breaking out today. Goes up when the diamonds are bad. SQQQ goes up when the Q breaks down. Got mobile breakout and a CPR. Could run all the way up to $86, 13 bucks. TZA getting ready to break out as well. Like the other has to clear the 50. I'll leave that one alone. Emerging markets. I got a split in here. I'll have to remember to tell that to Praveen so we can fix that. Biotech. We're starting to see some movement on the biotech bear ETF. Not ready for that one yet. SOXS will go with semiconductors breaking down. They're still holding up, but that's worth watching. And then talk about financials. FAZ is a leveraged ETF for financials. I would have been better off buying this and selling my Bank of America. But a big breakout here is probably the best looking of the bunch. Let's look at this longer term. It had a split. FAZ. All right, I have to tell Praveen. All right. Dust goes up when gold goes down. That's not happening enough yet. Tech is a inverse ETF to technology. So this is a leverage ETF that goes up when tech goes down, starting to move. Webs, negative the internet, short the internet plays. I think that's it. There's a lot of damage here. And when the contra ETFs start to look attractive, we're probably getting to a point that you should be concerned. Should you load up on them? I have no problem buying some here. I will tell you they are trading vehicles. They're not investment vehicles. Let's see what the CPI is and see the response. But if this market's going to roll over, you can make a lot of money on leveraged contra ETFs. Historically, I'd rather do that than sometimes than short individual positions. But that's me. Everybody's different how they approach the market. So I mentioned today I didn't sense how bad it was when I just looked at my portfolio, partly because of the protection, but a lot because of this one. So we gave you HWM below $200, and we gave it to you. Why? Actually, I think it was crossing above. What was the high that day? Open, high, low, close at 203. Because a breakout above the 50 and a double momentum from a squeeze with a good relative strength at OBV. That's my trade. I don't buy it typically during the day. I buy the next day if it trades above the high of this day. So I got in here. Now it round tripped, except I bought a put up here because I was just playing defense. And then it traded back here, and then it had a big move this week. You wonder who knew insider information about earnings. big volume day because of earnings, and you could see up here it had $1.05 versus 74 cents, a 41% and an 8% surprise, 14% revenue growth, and a 2% surprise. Would I be buying it here? I'd be careful. I think you're going to see 100 on the high jump. I have it. It closed down off the highs as everything sold off. I'm not sure I'd be adding to my position here, but it's something I'm going to watch. If the market was strong, different story. Another one that I also, hopefully it'll be a waste of money. When I'm buying a put, think of it as short-term insurance. Here's one, and it's funny. I don't even know what I thought this was. Here's one that I'm in, and this is a Chinese data center plate. And that looks like a top tick there, so I bought a put on that. It might be worth cashing out, VNET. So there were some things that did good today. Some things that did surprisingly good. Walmart. Oops. I guess if the middle class doesn't go to the fancy stores, they're going to Walmart. And Walmart's setting all-time highs today. Let's see what Costco did. Costco breaking out too, but very different patterns. I love what Walmart has done. Steady, steady uptrend. All right, so you probably expect me to show you some stocks to buy. Let me show you what I tried to do yesterday. Yesterday, I took the list and I dropped it and I went and I pulled out rockets in flight. And today was a horrible market. We can all agree, can't we? And if you look at it, you can see there's a mixture of green and red here in this filter. And it's found 229 stocks. I brought them over to new list, same 229 stocks. Here is the group index for these 229 stocks. Yeah, it's a crappy day today. Look at that long-legged doji. Maybe we're getting close to a top. You know, we spend a lot of time at my live meetings building an index of leaders. Don't you wish your portfolio looked like this? Has the market gone up straight like this over the last 2 weeks, 3 weeks? No, these are the leaders. So I made a comment yesterday. I think this is where I'm going to focus on. And I'm going to leave you with that. Have a great day. Let's see what the CPI is. I think there's risk. And as I said, I've been playing defense all week, raising cash, put some puts on, and my fingers on the sell signal for a lot more. I've got options expiring next week. So do you if you trade options. Sometimes it's good to wait if you're deep in the money, maximize what you get. Sometimes you just got to get out because your options become a lot less worse if this market, worth a lot less if this market sells off. Thanks everybody, and see you tomorrow or Saturday. And I'm going to put links in for 2 programs. Really appreciate it if you click on them if you haven't. Valentine's Day, and which is a traders forum that I've never been invited to before. And I was very pleased to see the number of people that clicked on my link. And the other is a Metastock conference on, I think I speak on a week from tomorrow on the 20th. Thank you and good night.